Hello, everyone. New all-time highs on the market. Things are about to get very, very interesting. Tomorrow we have FOMC statement and the federal funds rate. Jerome Powell speaking, right? And then next Wednesday we have CPI data. These two things are very, very, very important for the market. And in today's video, I want to describe to you guys what I think is going to end up happening. So with that being said, we're going to take a look at the overall market, the S&P, the NASDAQ, the Russell, large tech stocks, the VIX, and the bonds. All right, so without further ado, let's get started with the video. All right, so first and foremost, like I said, tomorrow we have the funds rate and the FOMC statement and press conference at 2 and 2:30. And then next week, we have CPI data coming out on Wednesday. Very, very important. Two major things that I'm really, really looking at. Number one, the VIX. So the VIX is important to look at because it has an inverse relationship to the market. If the VIX is doing well, the overall market is not going to be doing well. What we see right now is the VIX obviously gapped down, broke below 20, the 20.5 level I was talking about. Clearly, obviously, because the market is very bullish today. But we have opened and closed outside of the lower level of the Bollinger Band. When this occurs, it leads to a bounce in the VIX. If the VIX is going to be bouncing, then that should be bearish for the overall market. VIX contracts are also going to be much cheaper heading into CPI. So this gives a really, really good opportunity for the VIX to bounce here. And if the VIX bounces, like I said, the overall market should be falling. Now, the next thing is these bonds. So this morning, because the bonds were showing this much weakness, early morning, I could just show you guys. So early morning, at market open, for the first hour, I was basically very, very bearish. So this entire situation, early morning, I was bearish because we were consolidating. The bonds were showing a lot of weakness, and the market ended up shooting lower. And then once we came back and retested this level again, I was also bearish, and then we shot lower. So the bonds really do actually affect equity prices, throughout the day. So now going back, let me just clean this up. Now going back to the bonds, we are having a very interesting dilemma in the bonds. So the bonds are basically the bonds are correlated to the market. If the bonds are doing well, the overall market is also going to be doing well. What's interesting here is the bonds started to break down lower while equity prices started to skyrocket. So what this is basically, people are basically assuming that Trump is going to do a good job at tackling this economic environment. Interest rates will end up evening themselves out. And regardless of whether the yields increase and whether the yields continue to skyrocket, etc., because that's also been a very, very major factor, right? So the 10-year yields, the 30-year yields, it's basically just the opposite of the bonds, right? So the yields have been skyrocketing. Generally, when the yields skyrocket, it's very, very bad for equities. But currently, the market is assuming that because Trump is now president, it doesn't really matter what. Now that Trump is president, they're basically assuming that Trump is going to do a good job at handling this issue with interest rates and everything. And then with the housing, the mortgage rates, all that stuff. So that's going to be crazy. But generally, what I'm saying, all in all, is when this occurs, usually it is very bearish for equities. The fact that this happened this morning, and the fact that it happened overnight and in the early morning as well, that led me to be bearish in the early morning of trading, and it worked out really well. So the bonds showing weakness, which is very, very peculiar, and it is what it is. You can't do much about that. So taking a look at large tech stocks now, we have Apple not showing that much strength. Amazon continuing to break and hold outside of the upper level of the Bollinger Band, clearly getting overextended. When things are overextended like this, it's similar to what we see back here. We're going to get either a consolidation or a pullback. So something like this cannot sustain itself to just continue to rise, in my opinion, unless Amazon is the next NVIDIA. This should stop soon. And when it stops, it's going to, people are going to need to start taking some profits. So with that being said, on Amazon, Microsoft, bit of a bounce. Google also outside of the upper level of the Bollinger Bands. Also getting a bit overextended to the upside. Netflix not yet overextended in terms of the Bollinger Bands. It clearly looks strong, could continue rising. Meta still showing weakness below 570, which is great for bears. And it continued to move lower potentially on Meta. NVIDIA, new highs. NVIDIA did well. Made new highs, not yet overextended just yet. And AMD trying to bounce, similar to Apple, one of the losers. Tesla obviously skyrocketed because of the correlation between Musk and Trump. Tesla did well, and now it's outside of the upper bands. Do you want to start longing Tesla? Do you want to start longing Amazon, Netflix at these levels? No. If you don't want to start longing, then you have, once again, you have two choices. You wait for a better long opportunity, or you wait for a better price to short. And currently that is what is happening right now. And it's really interesting to see not only the dollar rising, because we could also see the dollar rising. The dollar is rising. The yields are rising. The equities markets are all rising. This does not occur because we've been monitoring the dollar for years, and the dollar has a very, very negatively correlated relationship to the market. Because if the dollar is rising, the overall market should be falling. What we've seen in the past few weeks has been the opposite. The dollar has been quite correlated to equities, which is very, very interesting. And it's a new experience. So not only is the dollar rising, the yields are rising, equities are rising. It's pretty interesting. And, clearly that is something that we have to continue monitoring. We see that the S&P looks like it's about to tap 6,000 on the ES, which is going to be the equivalent of like 597 on the SPY. The NASDAQ has not yet made new all-time highs. Still obviously showing strength, but the Russell was the biggest winner today. So the Russell stocks, banks, random, basically, like economically sensitive stocks, like Sunrun or Roku, and like just IWM related stocks did very, very well. Bitcoin did very, very well. Crypto related stocks, all of these economically sensitive stocks did very, very well. Just the crappy sort of stocks, as well as the banks and institutional, they did very well. And all of this is screaming that regardless of the yields increasing, they believe that it is still going to be bullish in the long run for interest rates and for this inflationary, deflationary, stagflationary environment. So this just generally does not occur. When all of these metrics are all pointed bullish, something has to give. And we just have to monitor what that something is going to end up being. So thankfully, probably going to sell out of the entire call position as we touch around 6,000, 6,030. But the thing is that we could continue rising into CPI data tomorrow. So here's where the interesting part comes. Tomorrow, is FOMC going to cause another $5 rally in the S&P 500? Probably not. We could see a continued rise into next week's CPI data. Once that occurs, that's when the market is really going to have to make a decision. And that's when a pullback could potentially occur as well. Because after a massive, massive run up like this, can bullish participants expect another massive move due to FOMC, and then, some chop, et cetera, et cetera, et cetera, and then another massive move due to CPI? It doesn't seem likely. That's the thing. And especially if the VIX is trading below the Bollinger Bands, if the bonds are showing weakness below major levels of support, I don't know how this is going to continue rising at this point. But hey, let's see what ends up happening. And regardless, we make money either way. We don't have a bias. I'm just sharing my thoughts. It would be very surprising for us to continue rising like this. We could, though. It is what it is. I don't really believe it, but it is what it is. That's that for the overall market. This is like really, really uncharted sort of territory in terms of technical analysis, in terms of macroeconomics, etc. And we're just gonna have to take it one step at a time, honestly. So the main things that we're gonna continue watching are the VIX, the dollar, the bonds, the yields, and equities. That's all that we could really do. Aside from that, those are going to be the main things for swinging. Aside from that, thankfully, the intraday setups and day trading has still been working really well. It doesn't seem like it's a complete change in price action, thankfully. So it's still doing pretty well, regardless. Thank God. And yeah, with that being said, man, I hope you guys enjoy today's video. Hope you guys have a good time with your families, your friends. I'm not sure which direction you guys voted. That's not really something that I, ever talk about, etc. But regardless, I hope everything works out for you and your family, and you guys are happy and content and thankful. Because at the end of the day, we're still living in America. Things could have been much worse. We could have not had access to internet, but we're fortunate enough to be either in America or, you're sitting in front of a screen watching technical analysis about the stock market. Things could have been much worse. Things could have been much more different for us in our lives. So just be thankful for that. And with that being said, hope you guys have a wonderful rest of your day. Love you guys. Take care. Have a good one.